Welcome, ladies and gentlemen, to Commodity TV, and it's a little bit a different format today as we are using a different service provider. And yeah, we want to do an update with Farhad Abasov, well known, and it's a real honor for us to talk to him today, the CEO of famous Millennial Lithium. Farhad, good morning to Dubai. How are you doing?
Guten Morgen, Jochen. Everything is good. How are you doing?
Yeah, perfect. Thank you very much. A bit early for me, but I had already 2 coffees. It's fine. Yeah, Millennial Lithium, you were very successful in the past already, and it seems now to be like that you are approaching, I would say, the takeover radar. So please give us an update to your wonderful company, and I will ask some questions in between.
Sure, Jochen. Thank you very much, and good to see you again. Good to see that you're in good health and everything is good. So look, I mean, quite a few of your viewers are familiar with Millennial, so I will really focus on major aspects of the project. Millennial Lithium has been developing a lithium brine project in Salta province of Argentina for the last 3 years. And the project is well developed. This is probably one of the most advanced lithium brine projects in the world at this point, Jochen. This slide that I have up on the screen basically encapsulates all the major advantages that the company has. As I mentioned, we've already advanced the project to the point where it's ready to go into construction, and we'll talk about it in more detail. But you can see here that, look, the feasibility study has been completed. We already have been operating our pilot plant for quite a few months, and we've successfully produced a very high purity lithium carbonate product already using very conventional approach, meaning the solar evaporation ponds and with the processing plant at the end. We already secured our environmental permits, very important as well. And if you look at other aspects of the project on this slide, you will see that this is really well-positioned project, meaning that there's a huge resource. We got proven and probable reserves enough to produce 24,000 tons of lithium carbonate of battery grade for almost 40 years. And we are in one of the best mining jurisdictions, not only in Argentina, but I would say all of South America. This is Salta province, has been very supportive of mining industry, specifically of this project. Infrastructure is really well developed. Again, you will see that later on in the presentation on the map as well. And the management team has done this before, so we have a pretty good track record of how to identify and then develop these mining projects, these large projects, sometimes in remote areas as well. And the company is well funded. We got about $50 million in the bank right now. That is sufficient to take us for quite a few years forward, because our burn rate has come down dramatically now that we've completed most of our technical programs. But of course, right now,
who is that large strategic investment from Asia? First question. And do you receive already more, let's say, interest from Asia? Because they are all the big battery makers, right? And as far as I know, with the market, supply demand is, yes, slowly but surely going into an imbalance.
Yeah, Jochen, look, I mean, first of all, maybe on the strategic investor from Asia. So they came in 2017 and 2018. So it's a large solar power company called GCL. They invested heavily at the time. They owned about 17% of the stock, and then recently we raised more funds, so their stake has come down a little bit. But they've been a very strong supporter. And but in addition to them, as you just noted, we've had a lot of new interest. Now, in the last few months, we've been advancing talks with various groups on both a strategic investment and offtakes. But in addition to that, after we announced our 99.96% grade lithium carbonate of battery grade, we have received even more interest. And again, primarily because the company has proven that it can produce high grade lithium carbonate using conventional method, meaning that we can keep a low cost structure. But at the same time, as you've seen already, it is the most advanced project, or one of the most advanced projects. So, that type of strategic interest is quite understandable at this stage. So, a couple of other things here. We'll talk about the details as well. But the feasibility study showed that this is a very strong project. The IRR and NPV numbers are very robust. But also, just to bear in mind, this is not the project does not involve any kind of a new technology, any kind of a new approach. This is plain vanilla conventional solar evaporation route that has been used by 3 out of 4 current producers in South America. So that's very important because technical risk here is as minimal as possible. So again, I'll show you the schematic and explain how it works.
Yeah, Fahd, at what LCE selling price have you calculated the DFS? Meaning, what was the selling price you took as a basis, and what is it today?
Yeah, so when we did the feasibility study, Johan, it was 2019. It was August 2019, and at the time, the consultants who did the feasibility study actually took the price of about $13,000 per ton. But at that time, actually, the spot price was much higher. So we took a very conservative price at the time. But then, of course, as you know, the price went down, but it came back to basically the same level now. It's between $12,500 and about $13,000. Yep. So it is quite a realistic price at this stage.
Yeah, so what I wanted to say is that you guys calculated already very conservative, so you are not affected.
Exactly. Yeah, absolutely. We did not take very lofty prices that were around in 2018 and so forth. We actually took a price that, again, our consultants, the third-party group that did this, thought that would be a long-term price for lithium for quite a few years to come. Obviously, we'll see fluctuation, Johan, as you know, up and down, but on average, we think that's what's going to be. Yeah. So, look, I mean, and again, the lithium sector, we'll talk about the growth in the sector. I think a lot of people are up to date on it. I mean, we see news right, left, and center about EV growth and, of course, demand for lithium batteries driven by EV growth demand as well. So we'll talk about it. We'll also look into how it's going to affect us down the road as well. So a couple of words about our management team. Again, I think, you know, a lot of your viewers are familiar with myself and a couple of our management team members, but the bottom line here is that we've done this before. The business model that we always employ is pretty much the same in this case as well, is that we find potentially world-class assets and we develop it to the point where we can either fund and build these projects or exit through M&A transactions. So you can see some of the examples under my name there, but also we have a very strong lithium-focused team here, led by Ian Scarrow, Chief Operating Officer, who's been in this business for many years. Most importantly, he's based in Salta province. And you can see the rest of the gentlemen here are all top-notch experts in their fields. And as I go through the presentation and explain how the whole process works, you will see that these people are critical. They bring critical knowledge to different aspects of the process, from drilling all the way to evaporation ponds management and processing plant as well. So let's talk a little bit about the industry. You kind of already asked the question about the price, and so we can talk a little bit more here. As you can see on this chart, the price reached, this is again spot price, the different lithium products there, as you can see, but let's say the lithium carbonate price that we're talking about, it reached almost $25,000 per ton. Almost 3 years ago. And that was basically the top at the time. And then it started sliding until about September, August last year. And then we saw tremendous demand coming from EV manufacturers, or car manufacturers, I should say, for lithium batteries. And that started really pushing the price back up again. It's interesting that this has been happening in the middle of COVID. So despite all the lockdowns and all the restrictions on travel, et cetera, actually, if you look at the number of EV cells, you would be shocked to see that they've been going up year on year, despite all these travel and other restrictions imposed on the people in basically many countries across the globe. And the key thing here is, again, the recovery of the price. I mean, we saw that in stock prices, in lithium stock prices first, but then that was basically a precursor of what was to come, and that was basically the almost doubling of the price of lithium carbonate from about $6,000 per ton in October to about $12,500 as of basically this morning. So that obviously has interesting implications going forward as to whether this trajectory is going to stay the same or it's going to plateau. We'll see. As we already mentioned, we touched on it, Johan, our view on this is that the price will probably hover around $12,000 per ton. It allows very healthy margins to existing producers, but also healthy margins to potential new development projects like ours. For other less developed or more challenged, technical, more challenged projects, they will probably need a higher price for investors to actually get involved. So it is, I would say, a sweet spot for the industry for the next few years. Now, if we go to the next slide, this is basically, again, supply-demand dynamic in the industry. And interestingly, for the last few years, the supply-demand has been in equilibrium, meaning almost everything that the world produces has been consumed. But going forward, as you can see, in the short 2 or 3 years, we're going to have a significant gap between supply and demand. It will be very difficult for production to keep up with demand that is coming online. And that is primarily driven by car makers. Almost all of them across the board are switching to EVs. And these are not just plants. They're actually already building them. They're building new models. They're building new factory capacity to actually produce new models, new EV models. So that is already translating into real demand for lithium carbonate and hydroxide and so forth. So you can see. Yeah, go ahead.
Sorry, do you see then, let's say by 2024, 2025, when we are leaving the equilibrium, could you imagine that then prices start to move upwards again? Because I think this is exactly the time when you guys would be in full commercial production, right?
Yes, exactly. So our current plans are such that, if we successful in securing funding for the project this year, we'll start obviously construction right away. It will take us about 18 to 24 months, Johan, to build the first, I'd say 50-60% of production capacity, so about 12,000 tons per year. And then another 18 months, so that will put us in roughly 2024, and you're right, early 2025, to actually complete ramp up to full 24,000 tons a year. At that point, according to this chart and many other charts, yes, theoretically, the price should actually start ticking upwards, primarily because demand will be pushing it in that direction. For it not to happen, we need to have tremendous amount of investment to come into the industry in the next 3 to 4 years. Now, we already see a lot of investment flow into the sector, but I personally don't think that it will be able to keep up with that demand. In other words, it will be tough to start basically, 5-6 projects that will be each producing between 40 and 50,000 tons a year in the next 3-4 years. There are plans there. Obviously, large producers are already trying to expand, etc. But as you know, projects like that always slip. So we think that, starting from 2024, 2025, it will be very difficult to keep up with that demand. So basically the entire industry, as well as all the investment community that is interested in the sector, should start planning for it today. I mean, they should have started yesterday, but better late than never.
It's good for you.
Yes, absolutely. I think this will be very positive for us. Yeah. And that's one of the reasons, Johan, we haven't signed any definitive offtake. And even the ones that are under discussion right now, they're all linked to spot price. So we're not going to fix them in any way. We're going to have some floor prices so that we don't, in case some catastrophe happens, we don't have to produce at a loss. But in terms of potential upside, we want to keep it open. So we will, depending on, of course, on the structure and offtake, if the offtaker potential invests in the company or in the project and so forth, or makes a significant prepayment, of course we will give them significant discount. But in the end, we're structuring the offtake in a way that will enable us to benefit from this potential rise in the price. Okay. So in a nutshell, this map actually shows you where our projects are. We have 2 projects. I've been talking most about Pastos Grandes, which is our flagship project. We have another project, which is an early stage exploration project called Cauchara East. That's in a different Argentinian province. It's called Jujuy, and that's next to producers Orocobre and others, Lithium Americas and so forth. Now, Pastos Grandes has been our flagship project, and that's the one that we've been developing very aggressively in the last few years. And you can see this is one of the most favorable locations in this part of what we call Lithium Triangle. Lithium Triangle because that's where most of these lithium brine projects or deposits tend to be located. And as you can see, we got basically all major producers in our neighborhood, SQM and Albemarle on the Chilean side, and then we got Orocobre on the Argentinian side. To the south of us, you don't see it on this map, but there's another company called Livent also in production. SQM, Albemarle, and Livent are all listed on New York Stock Exchange. Orocobre is listed in Australia. So the two key things here, Johan, is that the road access is great. It takes only about 2.5 hours to get to the project from Salta City. Salta is the provincial capital. Most of that road is well paved. Then we have access to other infrastructure elements such as natural gas and electricity or power grid. Right now, and you will see in the pictures, we're using actually our own solar power plant. So we decided to keep the entire project as environmentally friendly as possible. But going forward, we're also thinking about potential tapping into natural gas pipelines. So we've been in talks with local and regional gas suppliers, whereas we can structure a deal whereas they would actually take on all the capex, meaning building the infrastructure, extending the pipeline power project, and we'll sign an offtake with them. It will really be a function. Yeah, go ahead.
Yeah, sorry, the solar power plant is already in the size you need it, or can you enlarge it? Can you make it larger? To save more CO2, even to go more ESG, environmentally friendly?
Yeah, that's been our intention from day one, Johan. So initially, let me see whether I have the picture later on, but we'll get there. I'll show you. So right now, it's operating at a capacity of about 250 kilowatts. So enough to meet all our power requirements today for our pilot operations and so forth. Obviously, it's not enough for full-scale operation. For full-scale production, we'll need about 10 megawatts of power. Now, if you asked me that question 2-3 years ago, and I think we did discuss that actually 2-3 years ago, I think my answer was that it will be a bit expensive, not actually to build the whole thing, meaning it's not that expensive to build the panels and so forth. It's really the power storage, energy storage facility that's very expensive, because obviously we'll need to store the power to operate at night. It's a 24/7 operation. Today, the cost of energy storage facilities have come down dramatically. So it is possible, I'm talking about economical, of course, to build something that will compete with gas prices. So that's exactly what we're looking at, Johan, right now. Our preference would be to keep the entire project as I said, ESG friendly as possible, meaning actually scale this up, our existing power plant, and just continue with it. It is a hybrid plant. So in other words, we're using, I think 90% of the time we're using solar power, but if necessary, we can also use diesel generators as backup. So that will be a fantastic setup for us. Having said that, we're also looking into natural gas situation in case this becomes either very expensive or for some reason not viable. So we have both options, and we already have firsthand experience with a solar power plant, and that's very important. And it's been very, very positive.
Yeah.
So
great.
Ideally, we would want to obviously expand it. So on this map, I just want to show you a couple of things. This part of Argentina, Johan, has become a hotbed of lithium brine development. From north to south, we got producers like Orocobre and FMC. FMC in the bottom now is Livent. Then in between, we have a lot of development companies. Lithium Americas is already in production. It's a Canadian company. Lithium X was a small Canadian company which sold its project to a Chinese mining company, which is now trying to develop it as well. Galaxy sold half of its project to POSCO, which is a South Korean steel company. They're developing the southern part of it. As you know, Galaxy and Orocobre now are merging. So in other words, a lot of capital, a lot of foreign direct investment has been flowing into this part of Argentina. And Orocobre itself has a strategic partnership with Toyota, a Japanese car maker. And they are their off-taker and strategic investor and so forth. So, and what I want to say that I think that trend will continue, because this is obviously, a prime location where you can produce significant amount of lithium at a relatively low cost. And we're not an exception, obviously, to that. So on this slide, we're talking about our reserves. This was, again, done as part of the feasibility study. As you can see, if you look at the last column there, LC tonnage, so it's 943,000 tons. And now this is actually extractable, recoverable, and sellable product. So that's the number, and that is what will allow us to produce 24,000 tons a year for almost 40 years. So it's a long mine life, quality product, high quality product. And what we've shown recently, and I'm going to talk about it shortly, is that we can actually produce high grade lithium carbonate using a very simple flow sheet. In other words, without any major additions or without any major costs and so forth.
And
so
I think your product is very pure, right? You do not have any large impurities, and that's important, I think, for the afterwards processing, right? To keep the costs down.
Yes. Let me talk about it right now, Jochen, and then I'll go back to feasibility study since you asked it. So here's the most important thing. I mean, there are a couple of other companies, maybe one other actually, in that region that has been doing pilot operations. That the main difference here is that not only did we get to a very high grade, but most importantly, we got it during the first run. In other words, we tried it for the first time and we got to that level. The reason it's important is that many other operators who have been trying, some of them never actually achieved anything, meaning they haven't even gotten to technical grade, let alone to battery grade. Others who eventually got to battery grade did not get to the same high grade, but most importantly, it took them multiple trials, multiple runs. You know, dozens of times they tried this, they had to calibrate, they had to adjust, you had to reject this and that. And this is one of the most important things about this project, about the brine chemistry, is that we didn't have to do that, because every time you do that, Jochen, that translates into costs, right? Higher and higher costs. Exactly. You have to add here, there. You have to buy new, equipment. You have to actually add more chemicals, more reagents, and so forth. We did very little work to actually rejig the original flow sheet that is still available to everyone to see as part of the feasibility study, and that is the most important thing. And the folks who understand the business, I'm talking about strategics, saw this right away. It's not accidental that immediately after this news, we got two large entities who have approached us with their interest in potential large investments and offtakes. So, and this is what's going to set us apart, in addition to everything else that we've been doing with this project. In the end, Jochen, the key thing for us was to prove that not only is this economically feasible, but we actually can produce lithium carbonate of high grade, highest grade, because the process itself is quite well known. As I said, 3 out of 4 producers right now in South America actually employing this type of approach, this type of process. However, brine chemistry in each salar is quite different. So you have to really adjust it. You have to really adapt it to your brine chemistry. So that's why it was a major milestone for us. And I think that this basically kind of completes this stage of our development. And then, of course, we'll be facing large financing and then going into construction. So let me just go back to a feasibility study, because I think this is important as well for viewers to understand, is that this was based again on the same solar evaporation traditional method that I mentioned. It was done by a well-known engineering company called Worley Parsons. Their Santiago, Chile office did it because they're obviously well-versed, well-experienced in brines in that region. And you can see the numbers here. The key things here are, of course, the cost structure, the cost numbers. So if you look at the capital expenditures, our CapEx is about $450 million. One of the most, I would say, manageable CapEx requirements out there. And if you look at our operating costs, they're also one of the lowest in the world, $3,400 per ton. And what we've done in the last, trials, in the last run of the pilot operations, including evaporation ponds and the processing plant, is to prove that we will probably be around that number. In other words, maybe initially we'll be obviously higher until we reach certain, economies of scale, meaning certain production scale, but we will probably hover around $3,400, if not lower. And that's very important. In other words, we did not make any major change to the flow sheet itself. And that's very important. And again, you can see here, pretty long mine life. And again, we already received environmental permits based on this feasibility study. And that's very important too, Jochen, because you may have a great project, but it may be very difficult in certain jurisdictions to get your permits.
Yeah.
So just a few pictures here. So this is the solar evaporation pond solar plant that we've been talking about. And you can see the panels and in the forefront and to the fore, but also and right behind the panels, you can see a little box in the center. It's the actual little building, and that is the energy storage facility for us. Okay, so obviously, as you scale up the operation, if we do go ahead with a solar power plant, then that building will become a bit larger. Now, a few more pictures here. These are our pilot scale solar evaporation ponds. They've been in operation for almost 18 months now. In the top left corner, you can also see our liming plant, because we use lime to extract magnesium out of the brine. A few more pictures. This is actual construction when we're building our pilot plant. You can see also the inside of our lab. And then this was the building before. This is actually a community center that we've been building in Pastos Grandes as well. And then this is, again, the interior of our pilot processing plant. As you can see, that's been going on quite well. Everything has been working. Now, one thing I want to add here, Johan, that it's not just pilot plants, but it's also training plants. So even after we start full-scale production, this plant will continue operating, because we'll be training new personnel. We'll be obviously trying different things here and so forth. So we have a lot more equipment here than we might need, but we just decided to buy them all so that in case we actually need to tweak our process a little bit, we have everything available. So far, we haven't used any extras at this point. So just maybe quickly on the process so that people understand what it actually is involved in this. So as the name implies, this is brine. So this is a liquid acid or deposit, a resource. So we pump it up to the surface. In our case, at about 200 meters below the surface. So we drill into it, we pump it to the surface, and then we flow them into this massive solar evaporation ponds. You saw the pictures. And at the first stage, basically water evaporates and we remove salt from there. So halite is a fancy word for salt. And then we add lime to the brine to basically react with magnesium and take it out. And the second stage, we actually have now smaller ponds. And what we do there is the exact same thing, but with potash. So sylvinite stands for potash. So potash is actually quite prevalent in the brine. So we're talking about 4-to-1 ratio of potash to lithium. So in other words, for each ton of lithium, we'll be producing 4 tons of potash. So in our case, we'll have about 100,000 tons of potash every year. Initially, we'll stockpile it, but eventually we have plans to sell it, obviously, into the regional market.
Yeah.
Now,
as we know, you have some experience with potash.
Yes, just a little bit. Yeah, I cannot get away from potash, Johan.
It looks like.
This is to me. So the key thing here is the feasibility study that I just mentioned earlier did not include any sales from potash. So in other words, that was envisioned as pure lithium project, but obviously, we have to remove potash from the brine, so potash will be there and we'll sell at today's prices, market prices. We're talking probably about another $25 to $35 million coming from potash sales. So nice. that will be a nice bonus. So and then the last stage here is, as you've seen already, so it's a processing plant, a lithium carbonate plant, and at that stage we remove the rest of the impurities. We still have calcium, sulfate, boron, and so forth in the brine. A little bit of magnesium still left in the brine. So at that stage, we remove everything else. And then we'll wash the product, and the product is ready to be shipped. And that will be, in our case, lithium carbonate of battery grade. As we've shown, we can get up to 99.96%. So that is very important. And the price that we've been talking about, Johan, actually is the price that $12,500 currently is the price for battery grade material. So obviously we can easily produce technical grade material that's a lower purity, but I don't think we'll be doing that unless something happens, because it will obviously we'll go for something that makes fetches a lot higher price right now. So let me talk a little bit about our share structure as well. Right now, as I mentioned, we got about $50 million in the bank. Pretty tight share structure. We got less than 100 million shares outstanding. Management still owns about 10% of the stock. We got institutional ownership of about 10%. We also raised capital recently in February, and again, that was all institutional. And then GCL, the company, the Chinese solar power company that I mentioned earlier, still owns about 12%. They have a director on the board. So 1 out of 6 directors is their nominee. They've been very supportive of the stock as well. And as you know, we trade on Toronto Stock Exchange, but also we trade heavily in Germany.
Yes, I must say, first quarter the trading in Germany was 242 million euros.
That is mind-boggling. Yeah,
unbelievable.
So that's why I think my next language that I need to learn is Deutsch. So
yes.
So that will be it. So
definitely.
So look, I mean, maybe just I can finish off this with saying that look, I think the project and the company is very well positioned to become next producer. Now, our main focus is really on securing funding for this project. You saw $450 million. Just in a nutshell, the financing structure that we have envisioned for this, and we've been working on it for quite a few months now, is very straightforward. It will probably 50-50 debt to equity ratio. We've engaged Credit Suisse out of their London and Toronto offices to help us with that. And I think Johan, I mentioned earlier as well, we've been advancing talks with the various strategic parties in the last few months, despite COVID slowdown and lockdowns and so forth that has been going on. And the idea here is that, on the equity side, we'll get in a large strategic investor first. On the back of it, we'll also sign an offtake, either with the same party or a different party that will also help us with financing. We're not talking to any potential offtaker that cannot help us with funding. I mean, the offtake for us is another source of capital. So we're looking into it as basically another strategic angle for us. And that's why we're talking with some groups out of Europe, out of the US, out of Asia. We can either bring their own capital to the table or can help us with significant Exim Bank funding from their respective country. And that's why, it's been a very select group of potential off-takers that we've been talking to, because in this market, you can sign a lot of off-takes, but
it has to make sense.
Exactly. We want one offtake that will actually bring capital to the project. So that's why we think, look, we will do strategic / offtake funding first on the equity side, and then whatever shortfall we have, whatever gap we have, we'll fill in the market. We've also been talking to some large PE funds who specialize in mining, of course. And we think that we already have quite strong demand, mostly out of the US and out of Asia.
Farhad, given now the fact that you are in discussions for the funding, how dangerous would it be that you will be taken over straight?
Yeah, look, I mean, all of our projects have always been developed on parallel tracks, right? So we always want to make sure that the project is developed in such a way that it can either be funded and built by ourselves, or also it can be appealing to a potential acquisitor. So that is no different in the case of Millennial. So we always open to it, and we've had some interest in that regard as well. So in the end, it will be a matter of value. Whether it will make sense for us to actually exit through M&A and basically bring that type of proposal to our shareholders, or take it further on our own. Be it on our own, meaning completely independently, or with a large strategic investor as a partner. So we're at that stage, Johan. You're absolutely right. You've seen from our previous projects, almost all our companies have been sold post feasibility, post environmental permits and pilot operation. So we're at that stage where we have to really make a very important decision which way we go. And luckily, we have a very good team to kind of make hopefully the right decision. We got good advisors, and the market seems to be right. So that's why I think probably in the next few months we'll have clarity in that issue, and I think we'll make a decision and we'll make an announcement at that point.
Let's put it that way, Farhad. I know you.
Well, we're doing our best, Jochen, and we'll
I
try to do
know.
our
That's why
best,
I'm a shareholder. It's
in the
very
next few
simple.
months. Yeah. Thank you, Jochen.
Super.
Thank you.
Perfect. Anything you
Okay,
want to
so
add?
no, I think that's it, Jochen. If you have any further questions, obviously I'll be happy to answer. But I think this kind of covers everything that I want to talk and want to mention.
Yeah, definitely. Maybe one final question. Let's assume you get by, I don't know, September, October, you are funded, you have secured everything. What are then the next immediate steps, and how fast can you then really ramp up production?
So if financing is secured, let's say by the middle of this year or by fall, then we can actually start construction right away. I mean, you saw from the schematic that I showed, there are really three components of this project, or three aspects. One is drilling, or brine field we call it, and then and then the ponds, and finally the processing plant. Now, the key thing, or the bottleneck, is really the ponds. Not even the construction of the ponds, is really the time that it takes for water and other things to evaporate, and obviously to go through that process. So the first thing that we'll need to build is ponds, or expand existing ponds, and then of course concurrently with that, as the evaporation is taking place, we'll build a processing plant. So we can start building ponds. Going back to your question, we can start building ponds right away. So that means that probably by the end of first quarter next year, we can start filling them, or maybe even earlier, start filling them with brine. Because as we build the ponds, we'll also prepare brine field, meaning drilling and all that will take place at the same time. And then basically, I would say, as ponds are ready, and the filling of the ponds is ongoing, we'll start building processing plant too. So we think realistically we can probably get this all done within 18 months, although we put in the feasibility study 24 months, just to account for all kinds of potential delays, etc. We are ready to go with most of our permits. The key permits are in place, as I mentioned already. There's some operating permits that we need to get, but again, those can all be secured as we're building the project. For example, export license and so forth.
Yeah. Okay, super. Farhad, thank you very much. That was a very detailed update, I would call it, but great talking to you as always.
I lost your voice.
Thank you very much. All the best. Take care, Farhad.
You're back. Thanks a lot.
I'm back.
Take
Super.
Care.
Thank you very much.
Thanks
ladies and gentlemen, that was Farhad Abasov, the CEO of Millennial Lithium, and you heard it. The company is progressing extremely well. Financing shall be secured within the next, hopefully, 6 months here, and also they are talking to various off-takers and strategic investors. So a lot is really progressing here, and we are very hopeful and very positive on the company, because lithium is really on high demand, and as we saw on the chart, by 2024 there is definitely a supply deficit, and this would mean normally that prices are rising. So I would suggest you check out the company. Thanks for watching us, and bye bye from Switzerland.